Traders, how y'all doing? Okay, this video gonna share a lot of things. Free trading education here with Milani. She's a bit tired from the fireworks, New Year's. Free trading education. We're gonna be talking about discretionary versus systematic trading, and share a lot of thoughts, share a lot of insights, share some ideas about what it takes to trade profitably and all that. So let's get into it. So the premise is, I'm going through all these Market Wizard books by Jack Schwager, and there's so many rabbit holes in here, but what he's done is he's gone and selected the best traders in the world from a provable track record. These are CTAs, they're money managers, people who send him his brokerage statements. So these are the verified best in the world. Some of them have insane track records where they were doing many multiples for years, 100+% for years. Some of them more realistic but still really good, 30% a year for decades, 50% a year for 15 years, things like this, like amazing results. And what's interesting, and he comments on this, but you notice when you go through it, is there's very few purely systematic traders. There's only a couple of them. And for the most part, from what I've seen, even the systematic traders, they lose their edge and they have to develop new systems. Sometimes the edge goes from winning to losing. Sometimes the edge goes from being very good to just making a little bit. But the edges, they stop working. And that's quite interesting. Now, also we see that discretionary traders, they often say, hey, we need to change our system over time. The setups I used to use weren't working. But what's really interesting is that for the most part, all the best traders are discretionary. They're rules-based, but they're discretionary. So we need to define what discretionary versus systematic means. But it's interesting. It's interesting. So there's a lot of little rabbit holes we're going to go through here. So what is discretionary? Well, let's start with systematic. What does systematic mean for trading? Strict rules, TA, essentially. So the systematic trader is running algorithms. These guys, for the most part, are not running algorithms. There's some of the guys who use algorithms as part of them, but for the most part, they're managing their money through discretion. So strict rules, TA. What is discretion? Okay, discretion is fundamentals, news / events, and positioning. So from what I've seen, the best guys, they do both. They're rules-based systematic traders. So what that means, what they do is they're fundamentals, news, events, and when I say positioning, I mean how other people in the market are positioned. If the market's net long, if the market's net short, they use their discretion. Yeah, wrote that like an imbecile. They use their discretion to create a bias. And they then use that bias and they use their trading system as a way for timing and managing risk. So I'm not saying this is the way it should be done, but I'm saying that the guys who do the best seem to do this. So I think we can understand why you need both. If you're systematic only, one of the problems is if it's just an algorithm, it's too easy to copy, and this is one of the things that I understand has happened with trend following. There was a systematic trader who did extremely well in the 70s, 80s, Ed Sykota, but from what I understand, these trend following systems have been copy-pasted across all the biggest funds in the world. There's billions and billions and billions, trillions of dollars in trend following, and it's taken a huge amount of the edge off because it's become the the most popular strategy from the largest funds is trend following, which means that if purely systematic, it's just if it's really that good, it's going to get copied. But if it's discretionary and it's that good, it might be hard to copy because you cannot necessarily code it, right? How do you code a fundamental analysis? How do you code a response to news events? Well, people trade news events algorithmically, but they program it in advance. It's not like it interprets it. They say, okay, if the news happens this, I want the thing to buy. But that's also very rare and hard to do. And then positioning, which can be a part of a chart, is like who's been buying, who's been selling, how much margin is there, who's vulnerable, and so on. But we can see, okay, if it's systematic, it's just too simple, right? It doesn't take that much skill. It does, but and I'm not saying you cannot be profitable being systematic only. There's guys in here who only run trading algorithms, and they do well, but he included them because of the interest of what they're doing and saying there's an exception. This person actually doesn't have as high return as I normally would include, but since they're systematic, I thought they'd be interesting to include. So of all the guys that are doing many multiples, they're discretionary. So I want to look at, now again, I'm not going to eliminate systematic trading. I think both's very important, because if you're only discretionary and you're saying, well, fundamentally the market should go up here, but you don't have a clear entry, you don't have a clear stop loss, you don't have a clear take profit or a stop loss management or money management, then you're going to potentially blow up, right? You can be right, but you can blow up. So both these things are necessary. Let's focus in on discretion, though. What are these things? Fundamentals, news events, and positioning. And I want to get more specific and look at particular assets. So, yeah, fundamentals. Well, we're going to look at fundamentals, news events, and positioning, but we're going to look at them. Let's drop down to particular asset classes now. So, but if you're with me here, the premise is that systematic traders, if you're systematic only, you're not living up to your full potential as a trader, because you're missing out on these like grokkable, understandable stories, narratives. Discretion is narrative too, of what makes the market move, and that, but with a system overlaid on top of it that tells you how to trade in the direction that you believe the market should go based on fundamentals. It's a important combination. And I'll tell you also, I'm 3 years into my trading investing journey. I'm net profitable on fundamentals, news, position, narrative. I'm net unprofitable just trading the chart. That's true, actually. I'd say I've been hugely unprofitable just trading the chart, and hugely profitable just trading news or really long-term fundamentals. And yeah, that's something that I need to change, as in the last couple of years I've really been focusing on the chart too much, and I need to focus on the fundamentals and develop my discretion better. Now, like, you could say you can use discretion and trade random chart patterns. That's not what I'm talking about. I mean, you can be the majority of traders are discretionary, and most of them are losers who trade the charts discretionarily. I'm saying use discretion based on some kind of fundamental analysis. So let's take a look at it. So again, we're looking at, so when we're talking about discretion, there's a couple things we're interested in. We're interested in news, we're interested in positioning, we're interested in narrative, we're interested in fundamentals. What do fundamentals mean? What's going to depend on which asset? And I'm not gonna talk about stocks here, although it's obvious that earnings is probably the most important factor there. Just because I don't trade stocks, I trade futures only. I trade. I would love to trade stocks. I think it'd be a lot of fun. But at this point, it makes sense for me to trade prop firms because of the drawdown properties, protects my capital more leverage as well, gives me more shots at home runs while not necessarily losing money on losses. So I don't trade stocks, I just trade futures. So let's talk about different futures. Let's start with gold. What do you need to trade gold with discretion? Well, one thing that I've learned, and I don't know, I'm still learning this, is commitment of traders. The commercial hedgers is hugely important. Shout out to Larry Williams. I made a video about this recently. But for gold and silver as well. So let's start with the precious metals market. You have these gold miners, gold producers, these gold companies that have a huge backlog of gold. If the price goes way up, they want to lock in a sale at that position, they go short. So you have a gold business and not want to be a gold investor, right? So if you have a huge backlog of gold, what you can do and what they typically do is they actually have a branch of their firm that trades, but they're hedging, they're net short. Generally, they're net short. So with gold and silver, when the commercials, if the commercials ever go long, if they ever go long in the futures market, in addition to being long in their physical backlog, it's a sign that gold is about to go on a rally, because these commercial hedgers, the commercial interests, they know the supply, they know the demand, they know their business. They're smart money here. So that's one of the things for gold. Silver, another one is war. Gold tends to do well when there's an outbreak of war, because people are concerned about governments. There's just an association there. There can be narratives. What else? There's rarely like really new specific things for gold. It's such a big market. I guess inflation and interest rates. Which are related, but it seems like, I mean, gold is sort of weird, but and I'll say monetary expansion, M2. One of the selling points in the narratives of gold is like store value, right? Not inflationary. It's less inflationary than fiat money, so it can do well in an inflationary environment. It doesn't necessarily do well. It seems like it does well when there's inflation, but rates aren't getting jacked up yet, or rates are coming down. Yeah, I'm still working on this one, but commercial hedging is a huge one for the gold and silver market. So, and I wouldn't just say gold and silver here, but all commodities. Where we also have, what is a fundamental commodity? Weather is another one, where like the soy market can get rocked by oversupply. If the weather is terrible in the Midwest and there's not as much wheat, the price jacks up, right? We go back to war for oil, right? When there's a war that breaks out in the Middle East, and this happens so many times, from the Persian War, Gulf War, to Iraq, Iran, Afghanistan, to even Russia invading Ukraine, can disrupt these markets and cause. War is typically good for a commodity, because if you think about it, war is destructive, right? War depletes resources. Commodity is another word for resource, like oil, copper. So when you're going to war, you're using these resources and also destroying capacity, right? When you're bombing Ukraine, you're destroying their ability to produce wheat. You're destroying their ability to produce whatever it is that they produce, right? If you're bombing the shit out of the Middle East and their oil producers, you're hurting their ability to produce oil. The price of oil is going to go up, right? And then you have recovery, though. War is ending. They're getting back to the production levels from before. So I mean, this is things that to synthesize, and if it's like, and then if it's like, okay, there's a war breaking out, the commercials are long gold, and inflation is high, but they're not lowering rate, they're printing money, then it's like, now I have a bias, right? So it's my discretion to go long, but I'm looking for a key low to be taken with the pullback. I'm looking for a breakout above a monthly high, depending on my system, right? I'm looking for, I want to trail my stop loss in such a way, based on a daily low, based on an EMA, whatever it is. But I'm only applying my system once I have this story here, right? So let's go from gold to crypto. So I only trade Bitcoin and ETH now for the same reason I don't trade individual stocks, because I don't really have access to, and also because you can have too much breadth maybe, but like news wasn't huge for gold, but news is huge for crypto. There's a Bitcoin ETF, there's an ETH ETF, this exchange went bankrupt, ideas for longs and shorts. This project is upgrading this thing. News is huge. Narrative can be huge. Crypto is super liquidity sensitive. It seems like it really cares about projection of interest rates, right? Which makes it care somewhat about inflation, but really it wants there to be inflation. If there's major deflation, it would, since it's the liquidity contraction would destroy it, or not destroy it, but cause price to go down. But it seems to care about interest rates. It also, from my experience, positioning is a little bit more, well, when we talk about positioning for gold, it's commercials. Well, when it comes to Bitcoin miners, that's a good question. I think if we knew if Bitcoin miners traded hedged in the futures markets, that would be interesting. But it's a little bit easier for them to sell their supply as it comes out. But that would be very interesting, but it's not available data. So what we have that's available, we don't have commitment of traders for Bitcoin miners, how they're positioned in the futures market. But what we do have is the funding rate for how the futures market is positioned. It's pretty easy to see if the market's net short, net long, or very long, very short. Typically during bull runs, the market is long, the market's long during bull runs. But at the very top, everybody is long. It's pandemonium, right? And as price comes down, oftentimes everybody's short at the bottom, right? And it doesn't take rocket science. If everybody's long, if people just start to switch or take profit, the trend will reverse. If everybody's short, same thing. If everybody's short, who's coming in to sell, right? These people need to cover at some point. So I found positioning to be very useful, but at the same time, for Bitcoin and Ethereum, if I believe the market's overheated because everybody's long and there's liquidation risk, I can't just go in short because the thing can just keep on trending, right? I need to say, okay, now I go to my system. I have an idea here. Now I go to my system. If price takes this high and comes under this high, then I can try to pick a top here with a tight stop. If I lose, I fixed risk. This is systematic trading. Or if it starts to break down, that fit my idea, then my system can tell me to sell here with a stop here. But after already having this idea, and there's other things, I'm sure I'm missing some things, right? So let's go to the foreign exchange market. What are discretionary events? There's bank policy, interest rates, money policy. There's also war again, sometimes, like Russia, the ruble had some really nice moves during that war when the war started. When Israel and um, Palestine, when they're escalating, there's a couple nice moves in the Israeli shekel. So that can be something that happens. These policy, interest rate, and money policy things, they get hinted through these meetings and remarks that are made by bank officials. But so, I mean, interest rates is an obvious one where if the dollar, if one, what is the trend though? Like you could say, okay, if the dollar is coming into 2024, they're supposed to cut rates 3 times in 2024 supposedly. Therefore, the dollar will go down. Compared to what? What are the other currencies doing? So you want to find another currency where they're hiking rates, perhaps, and tightening. And then you trade the difference in policy, right? And then you go into the charts and you look for a setup. But you don't just look for a pattern already. Although a pattern, I mean, it can also go both ways, though, where there's a pattern and it's like, wow, this thing is so strong, what's going on? And you go and you find the story and it makes perfect sense, right? Another one though is the bank policy, the monetary policy. So they don't always intervene through interest rates. They have other things they do. A common one is buying and selling their own currency. Singapore dollar, for instance, does this instead of, because they're so export import based, and interest rates more affect the internal economy. Instead of focusing on interest rates so much, they like to control their currency by, if it gets too high, they sell their currency. If it gets too low, they buy their currency. Hong Kong dollar is another one that does this. The yen does a thing where they buy unlimited amounts of their bonds, so they print a bunch of money potentially, although people are speculating that's going to end, etc., etc. Well, for the Forex market, these are some of the things that can create discretion, which give trade ideas. Right. So the last major market, I mean, we look at bonds. I should pay more attention to bonds probably. But bonds, it's just interest rates, right? Stock indices is the last one, right, of the majors. So this is another one that's heavily interest rate driven. But there's also monetary supply is important here. M2, is it expanding? Is it contracting? It can also be certain trends like tech, AI, social media, EV, stuff like this. What else for stock indices? Positioning, I feel like it matters less, but it maybe matters if you notice everybody's long in the futures market and everybody's short in the futures market, maybe it's likely to go the other way. But also understanding for stock indices, like IRA is a thing. So this is culture. People get these retirement funds and they just passive index investing. So for me, it's like I don't really love shorting the stock market because it's a cultural norm to passively invest dollar cost average, where it's not so much of a cultural norm for Bitcoin. So this is for sure not exhaustive, but here's some ideas for some of the factors. And if it's like hard to wrap your head around, I think that's the point, is you cannot really automate this. But if you cannot automate it, it means you cannot really be copied. People can't copy and scale to infinity, right? The best algorithms or trading systems are scaled to infinity, right? But if you are able to start with discretion and then have a basic, simple, easy to follow system, then that's what the guys who are making the most money are doing. The people who are really consistent. they're trading ideas, and then they're using their system to trade it in a risk managed way. So yeah, this is something that I've realized has been a pretty significant weakness. I like my system, but I've been weak on discretion. I mean, I've traded the charts discretionarily. I think that's the worst thing you can do, and that's not what I'm talking about. You want to be fairly systematic on the charts, but discretionary in your asset bias, and use the charts for timing and risk management. Now, again, that's just based on what I'm learning. So I don't know. I'm not perfect. I don't have all the answers. Appreciate you though. Much love. Thanks for watching, and comment down below. Let me know if you found it useful. Peace.